All right, everyone, welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. We've got our Black Friday special going just for another day. So lots of deals here, stuff I've never done before. Come check that out. It's actually in my pinned tweet in my bio. You can actually see that. Right here in the corner at Aaron Basil on Twitter for more details. Anyways, let's get into it this week here. So markets, again, kind of just able to have a kind of a holiday kind of float higher. And we talked about this last week, holiday volume, fund managers leaving early for vacation, not a time to be heavily involved in the markets. And you can see the spiders, look at the volume here, kind of just dropping off as we get towards the end of the week. Obviously, Friday was a half day. And we were able to just kind of float higher, and that is to be expected with light volume. You generally give the market a neutral to upside bias there. And we're also kind of just coming up against this trend line here again on the downside, which we broke on the 15th, and we've kind of just floated back up here. We did get the monthly close. So S&P having its best month of the year this past month, and a huge move there for the spiders. Q is also having a new monthly closing high as well. So again, markets are holding up as we get into the end of the year, and I expect more of that. Again, it's just we get a lot of end of year flows, a lot of funds winding down. Macro data will have a little bit less of an impact, if you ask me, unless we get some sort of big news, big major news. But as the year winds down, we get, kind of funds winding down. If you're up big for the year, you're not likely to take on a huge risk going into the end of the year. You're more likely to be winding down. There could be some fund managers chasing, right? There's always performance chasing and stuff like that. That does happen. But overall, I think we're just going to start to wind down here. I wouldn't rule out a little bit of backing and filling. There's always that possibility. But again, I still think there is really nothing stopping us from getting to that 6,100 handle by the end of the year. And again, that's kind of been my target since like late spring, early summer, when we were kind of back in this May area, set for like 5,600 by end of summer, and then kind of 6,100 by end of year. And I think we're going to get there. So overall market is holding up right now, and there's still some positivity out there. I know there's some froth out there with meme coins and stuff like that running, amongst some other things. But there are still bears out there that are willing to short this tape. And again, we see AII here. Bears have upticked each of the last 4 weeks. So again, even as the bulls got that big jump around the 13th, remember, you can see that right here. So that would be representative right there. And then we had the drop for 2 days. And again, bears upticking on pretty much any sort of downtick. So there's still people willing to fade this tape. And that does mean that, we can still see upside. I think you really need to see bear capitulation fully in order for that to change. And we have not seen that. Additionally, another thing that often gets overlooked here is there's still lots of foreign money that is very much willing to pour into U.S. stocks. And you can see European stocks here now underperforming U.S. by the largest margin in history, which granted, it's been on a downtick the whole way. It's not as if it's been in a range, and we're at the low end of the range. So I wouldn't necessarily say this is contrarian, but it's just definitely something to consider here. Additionally, record inflows, I believe record leveraged inflows as well into U.S. stocks. So, certain way to look at this would be, it could be contrarian to the other side, but there is still money willing to pour in here. So just be aware of that stuff. And again, we'll kind of just look and see how we wind down at the end of the year. I do think we will mean revert. We'll talk about this more as we get towards January. I'm sure Jason and I will do an end of year wrap or something like that. But I don't think that there's much fruit to be harvested from fighting this tape right now, especially as we get into the month of December. So anyway, spiders are holding up. Triple Qs here had a nice day. And again, if we look at the NQ, which I've been going off of lately, you can see as long as we just continue making these weekly higher lows, I think we can push to new highs by the end of the year. So no issues here. Really outside of really semiconductors, which we'll talk about in a second, but I do think they can catch up into the end of the year as well. IWM here, Russell 2000, again, still trying to hammer on that 245 all-time high. It did make a new all-time high intraday, but not a new closing. I think, let me just double check, 241.80. So technically the IWM made a new all-time weekly closing high this week by 5 cents or 6 cents. It did make it. I think this can get up to 250. I'm not sure how much passed from there, but I do think there aren't any real problems right now at the moment. The Dow here via the DIA, again, another nice up week here. And again, this is through that whole round number on the DJI of 45,000. So really, Dow 50K is next. We'll see if they try to get it there. SMH here, again, lower highs, and this is kind of the risk here. One thing that we'll talk about this more later, but NVIDIA here, still unable to break out on the monthly. So that's that July pivot, or excuse me, June pivot is held on a closing basis each of the last 5 months. So, and here's, another thing too. NVIDIA is now in the Dow. It's now it's about to go in the Dow, I think, at the end of the year. But it's also the largest in the S&P and the NASDAQ. So there's a lot of concentration risk here. And if you look at a longer term time frame of this has gone parabolic. It's gone straight up. There's been really no corrective move, especially if you look at like a quarterly. There's no correction here. Back in 2022, you had a simple 3-bar pullback on the quarterly. Well, that was a 69% decline. It doesn't look like it, but that's what it was. If something like that happened now, that would be a massive drag on the markets. This isn't to say that to make that prediction or scare anyone, but this is kind of the reality of where we are. I think there is concentration risk in this and in semis. Now, into the end of the year, I think they're fine. I think they can catch up, actually. I actually kind of like how we had this bear flag here that attempted to break down Thursday and it never followed through, or I should say Wednesday, and then it never followed through. And I think semis can kind of pick back up towards the end of the year, but I think as we get into 2025, I think there's definitely some mean reversion that starts to take place. IGV here, again, continues to be strong. Nothing really to say there. It's at all-time highs. Same thing with the Dow transports. One thing that I find interesting here on interest rates is they are quietly backing off, and not a lot of people are talking about it, but you see the twos here finally coming back in off that 4.4 area. Fed funds is at 4.58. That gives the Fed a little bit of room here. I don't think they're going to cut in December, which will be soon, unless this really starts to break below 4.1. I just don't think there's enough room here. That said, rates are coming down, but you can see the 2s and 10s are almost inverted again. So even as rates are coming back in, we're almost inverted on the yield curves again. So interesting setup there. 5s, 10s, and 30s also backing off. Take a look at the 10s. That's back below that big channel trend line there. So rates here coming back in. There's plenty of room for higher lows on the long end, though. So be aware of that. But we're definitely backing off. Now, again, the caveat, though, is that 210 spread is back to flat. So very interesting stuff there. XHB here back above resistance now. So we've been talking about 120. We gapped above it early this week, and we've just kind of consolidated. So home builders are back. And again, that coincides with rates coming in. So that's definitely helping out. VNQ also breaking out this week as well. So commercial real estate, nice little, we've been talking about this flag for the last 2 months, and nice pop. So good moves there. XLF, again, continues to be a powerhouse. I think it's really, it's starting to get stretched here. Remember, this is a banking stock index, not a tech, index. And I mean, you look at the monthly here, we're starting to go parabolic. So again, regionals also up very nicely. ABE up nicely, and the XBD has been parabolic for a while. It's parabolic on the weekly and the monthly. So just be aware of these things as we look at the bigger picture. Oil still kind of on the weaker side here. I think the war talk is a little overblown here. I'm just not seeing it in the oil price. If we're going to just bring that up really quickly, I think we could see maybe one more dip into December, and then I think oil starts to perform as we get into Q1. Right now, there's no trade on oil. Currently, I do have XLE, and I still have deeply in the money on this. So despite the little pullback here this week, I think that this is set up for a big leg in Q1 next year. Same thing with XOP and OIH. Uranium stocks continuing to perform well here. So a little pullback week here. That's really it, though. Just off of all-time highs on CCJ. URNM, again, still got to get above that 50 handle to really confirm that higher low here. And then the same thing with NJ. Got to break above that 200 moving average there with some conviction. We've had a few closes above it, but no real conviction. But we can get above that and sustain it. That confirms a higher low here. So no real problems, but just kind of in a tight range right now. Nat gas, I think, is topped out for the year. I think that probably comes back in until mid to late Q1. So just be careful with NG here, unless there's some sort of fundamental shift. I don't think this is going to really do much into the, I'd say February, March timeframe next year. And dollar index also backing off. So again, we hit that 108 area. Right there, pivot high and pretty sharp pullback. We're now coming into a little bit of support here around 105.50. And again, that is helping yields to come down. So onto the gold market here. Gold did have a pretty good slice back. Gave back some of those gains from last week. What a beautiful move that was, by the way, off of the lows. And we gave that support level out multiple times on our channel and to members. But any case, we did have a contract roll here. So COMEX close. Sometimes you get these pretty big downdrafts here. And we just kind of bounced a little bit into the end of the week. I don't see any real issues here with gold. I think I talked to you guys about seasonality last week. And I think that if this range just tightens up here, if we go to, like, say, a weekly, if we can just tighten up here on the weekly, I think we can see 3,000 by Q1. So I don't think that's unreasonable here. We'll have to see how the price tightens up. Obviously, if we take out this low, then we could be looking at 2,500, maybe the 200 moving average. But as long as we tighten up here and just digest this move, I think gold here is in pretty good shape going into the end of the year. We'll just got to watch GDX too. GDX starting to underperform just a little bit. It had a much bigger decline. In fact, it's closer to kind of like the midpoint of the range here for the last 52 weeks, whereas gold much closer to the high. So GDX still underperforming here. Maybe something to keep an eye on. We'll be seeing if that does indeed recover. And then we can see silver here also a little bit weaker than gold, right? It has a lower low on the daily. It's not the end of the world, especially if we look at the larger time frames. No real problems here, and as long as we continue making higher lows, there's no issue. But silver, platinum, and palladium also all kind of just backing off here and showing a little bit of weakness. So gold definitely still the big leader. Again, you got to take gains on the platinum and palladium when you get them. I mentioned that on my channel earlier this week. There's a reason why I do that. We took some profits on the way up. And, these things tend to go straight up and straight down. Once this does get a good trend leg going, though, which I do think the lows are in, once this gets a good trend leg going, we start making weekly higher highs. I don't think it looks back. But until that happens, this can stay in a range for quite some time. But gold here and precious metals not having the greatest week. But again, gold's holding up okay. We'll just kind of watch for that tightening range. Copper, I'd like a lot less. We lose that 4.1 area, we could be looking at, 385, 390. So just be careful here with some of these metals right now. Gold is still the leader. Moving on to Bitcoin, still didn't get 100K. I think we did on the CME. So I think on Bitcoin CME futures, technically they got to 100K. Yeah, they did, but that doesn't really count. Those are the futures. The real, index the real price that's followed on the exchanges is right here, and that's still at 96.7. Got to 98.688 yesterday. Overall, though, no problems here. As long as this just tightens up, this can just go through that 100K handle and then go higher. That said, Bitcoin dominance has kind of pulled back a little bit, right? So, and we actually got through that little level I marked there. And you can see here, look at ETH. So higher highs here on ETH versus Bitcoin, which has a higher high, but now a lower high here. And Ethereum starting to break out. So we are seeing the alts start to, outperform a little bit. Ethereum, I think it's got to get through 38, and then it can go to 4 to 42. And it's working on that right now. We're at 37, so good move there for ETH. And again, it doesn't mean Bitcoin won't or can't go higher. It just means that we start to look at, alt season starting to be a thing here. But overall, no problems here with crypto, and definitely a little bit of froth, perhaps, but that type of thing can last a little bit longer. And again, going into end of the year, I don't really think macro. We will have jobs next week, so we will get non-farm payroll and all that good stuff next week. But It's just really hard for the market to have a significant sell during December. It's very hard. There's just the way funds start to wind down, the way end of year flows come in. By the way, there's lots and lots of recollateralization that will be positive into the end of the year as well. So again, just keep those things in mind. We get into January, things can start to change a little bit. But right now, market's holding up again. I would give the upside bias to 6,100. That doesn't mean we can't pull back or consolidate. But right now, I think those both still have the upper hand and needs to be respected, as there's no damage here on really any of the time frames. So anyways, guys, I'll wrap it up here. Again, don't forget to come find Jason on Patreon. Come find me at conovertrades.com. I'll see you guys all next week.